All right, everybody, it is Wednesday. Leon and I are coming to you live from Invest in Education Academy. We have a good one. We're talking about the Apple iCar. So many rumors. Is it real? Is it not real? When is it coming out? Who are they doing the partnership with? It is real. Who will they be partnering with? Stick around and you'll find out. If you're listening to the podcast, this is, I want to say thank you for listening to the podcast and sharing it. If you all are thinking, how do I listen to the podcast? If you go to www.ieapodcast.com, you can listen to us, take us on the road with you, download any of the platforms that now feature us. You have Stitch, you have Google iPod, you have Amazon Music, you have iTunes, iHeartRadio. We are in a number of platforms now because of the support you all have shown, and we're growing. So if you're listening to us for the podcast, thank you. If you're listening to us live, thank you for being here. And yes, we will be going live in Clubhouse directly after this conversation to just discuss the market. Really, we're going to be focused on the iCar, but there are a lot of things happening in the marketplace, and we're going to touch on all of them. And as Leon tells you why we chose this, I'm going to do some housekeeping.
Yeah, interesting. A lot of news this week. So today, big news. So when I woke up this morning, first thing I do is I always check my phone for whatever, checking my account, checking news. And I saw that Apple was going to be partnering with a certain company to roll out the quote unquote iCar or Apple Car. So we did a podcast, I think 2 or 3 weeks ago on the same subject. And it was kind of speculative then. Is it going to happen? Is it not going to happen? Well, today, multiple sources, multiple credible outlets, multiple news organizations have reported that Apple will be producing a car in the future. Who they produce it with, still kind of fluid. All the details behind it are still kind of fluid, but we're fairly comfortable in saying that yes, that we believe in everything we've researched and read, that Apple will be producing what we're calling the iCar. Who knows what we call it? Apple Car, iCar. We're just calling it the iCar. So we're going to cover that today. We're going to go a little deeper into the stuff we found out, a few of the light details. Like I said, nothing is set in stone because they haven't actually signed a deal yet. But the news is out that that they are looking at definitely producing a car.
Okay, so, real quick, let me jump in. Mm-hmm. Okay, so some people are saying that they need invites to Clubhouse to be part of the conversation. For those that are saying that, I know you know my telephone number. Send me a text. I will get you an invite. If not immediately after the show today, I'll try to make it immediately after the show today. Just shoot me a text and we'll go from there. There you go, Lee.
Yeah, you throw slide one?
Yep.
Give me a sec. And so here we go with slide one. So this is just, so what we have on the screen here is a slide kind of detailing what we've learned today. And so we're saying confirmed, the Apple iCar is real. And first bullet point is saying Apple is
coming. It's coming. It's coming. The Apple car is coming.
It's coming. Yeah. So as we say in the first bullet, Apple is finalizing a deal with Kia to build a car. Now, notice that the key word there is finalizing. Nothing is set in stone yet. There are rumors that it actually could be another manufacturer. Because like 2 or 3 years ago, there was this rumor that Apple was going to come out with a car. And actually, we spoke about this in our in the podcast we did on this before, was that Elon Musk actually reached out to Tim Cook about Apple buying Tesla. And this is when Tesla was on the verge of bankruptcy. They were about to go under. They were scrambling to find money. And Tim Cook didn't even take the call. Like he was like, nah, he's not interested. The funny thing is, a little after that, Apple started hiring ex-Tesla employees. So there's always been this rumbling and this rumor that Apple wanted to do a car, but didn't want to buy Tesla outright because, that'd be, huge investment. So there's always been this rumor that Apple wants to do something around vehicles. So it was kind of, believe it or not, it kind of died down a couple years ago. And today, these reports have come out, like I said, from multiple credible news organizations saying that the Apple car is real, but who it's going to be with, we do not know yet. The speculation, speculation.
In that space, what you're saying is like 1000% right. Like Apple has been openly trying to woo Tesla not even current Tesla employees and the such into their ecosystem. And whenever you start seeing those things, that's positioning, that's market positioning. And those are signs that something bigger is afoot. So this has been a while in the making. I mean, it goes back to, I think, 2019, 2017. The conversations have been rumbling. So to see this now reach a place where it's closer at hand. Like, it's inevitable. It's just, how will it happen? Because the big thing was, and let me make sure it's not in here, just originally, the cost of Apple producing a car by itself was so prohibitive that most people thought it would never happen. So now that they're talking about doing a deal with Kia, I mean, this is prime real estate. So for them, this is how they run their company. So this would be interesting.
Yeah, and it's for Apple. It's not going to be. They're not physically building a car from scratch. They're going to partner with a current manufacturer, use all their infrastructure, use their supply chain, and it's going to be, relatively speaking, minimal cost to Apple versus building a car outright. So Apple's main, from everything I've read, Apple's main focus is going to be design and technology, right? So they're going to, they, of course, their name is on. They want it to be an attractive car, and all the technology inside is going to be mostly Apple related products and services. So bullet point number one, Apple is, from what we've heard, in negotiations with Kia to build an Apple car, what they're calling an Apple car. Second point is really interesting. So all the reporting right now is that it will be a fully autonomous electronic vehicle focusing on the last mile. And by last mile, that just means like food delivery, taxi services, things that kind of go between your house and kind of your local surroundings. Not like, driving to New Jersey or anything like that. It's going to be more of like a services vehicle initially. And then they're going to then build it out to be a consumer product. So basically what they're doing is they're going to use this as a test market. They're going to come out with essentially a business vehicle, get all the kinks out, and then roll it out to the individuals. But what they're saying right now is it will be a car for the last mile, or for businesses to do things like food delivery, grocery delivery, and maybe some sort of taxi service. And who knows, they may even partner up with like a Uber or a Lyft at some point, since they're trying to move into autonomous vehicles too. Tentative production will begin in 2024. Everyone's saying, from everything I'm reading, that really could be anywhere from 2024 to 2026 that production could begin. They haven't said when the actual car will be out. They're just saying when they feel that production will begin. Fourth point is really key here. So this is what it comes down to us as investors. So what they're moving into now is a massive market. So the global auto and mobility market is valued at $10 trillion with a T, $10 trillion. To put that in perspective, the smartphone market they're in right now is only worth $500 billion, of which Apple has about 30% share of that, or $150 billion in revenue, roughly. So they're going from a market that's $500 billion up to a $10 trillion market. And everything I've read also said that if they capture just 2% of that $10 trillion market, they'll be at the $150 billion they're making right now in phones. So just to match their current revenue, they only have to capture 2% of this new automotive and mobility market, and they'll be at $150-200 billion in revenue. So huge, massive, ridiculously sized market that they're now moving into. For the stock, nothing but great. I mean, we all love iPhones that use them. We all love their products. I believe this last quarter was Apple's first quarter ever grossing or bringing in over $100 billion in a quarter.
111.
There you go, $111 billion in 3 months. They grossed $111 billion for the first time, over $100 billion in 3 months this past quarter, $111 billion. So they're just totally crushing it on services and the phones. And now they're moving into a $10 trillion market, which is just, you can't even get your head around that number. So the elephant in the room with this also is, the elephant in the room with this now is Tesla. And the reason being is because the same person that buys Teslas they had the same customer profile as Apple users. So they're essentially one and the same. They're kind of like millennials, late 40s, maybe early 50s individuals that have a certain income, that fit a certain demographic. Those same people that buy Teslas buy iPhones. So question is, could this actually potentially hurt Tesla once this car comes out? Because of course the Apple fanboys and girls will immediately run over to buy this new Apple car. So
yeah.
This also affects this could affect Tesla stock too.
But you got to also think, and let's open this up, right? So if you all have questions or comments, please put in the comments below. But let's talk about Tesla. Tesla has a battery. Their next level, next generation battery is scheduled to hit in 2022. And that was announced at Battery Day. But Apple is talking about the fact that, with their production, and also we should talk about one of the things Apple is focused on is this revolutionary battery that they're kind of being quiet about. But if that battery makes it to the marketplace, it's supposed to be more efficient than the new 2022 version of Tesla's battery. So it's kind of a battle of who gets to the best battery. But where I think personally Apple has an upper hand is the fact that everybody walks around with Apple in their hand. And so that means some of the kids right now that are growing up digital DNA, when Apple comes out, it's going to be a natural progression to the car because they've been using the products all their life. Tesla can't say that. Tesla doesn't have that visceral feeling of the phone being in your hand. Although you got to think about this on the flip side, Tesla has the advantage of being in the marketplace longer. And then you have the coming of SpaceX. And from a technology play, Elon Musk has always used technology across multiple platforms to enhance each brand that he is part owner of or fully owns. So this is really going to be fun to watch because both companies have mastered vertical integration. They go everything from, I think, what's the new chip? The M1 chip for Apple.
M1, yeah.
And now I think the Apple car is going to use LIDC technology, which is a laser technology that creates a 3D version of the streets and everything around it that Tesla doesn't use. And so that's going to be different in the autonomous driving experience. It's supposed to be a more sophisticated system. And they have the ability to then start testing out Apple products and getting people used to the car before it's ever existed through VR. So they can, at any point in time, just drop an app. Just drop an app like Apple simulation cars or get ready for the Apple car and start prepping people to gamify the experience with the cars before it ever hits, which is going to increase their sales when the cars come out. So in regards to market and how these companies approach vertical integration, they both strive for excellence. Apple doesn't have a great history for being environmentally friendly. So a lot of environmentalists are happy to see Apple even exploring this side of technology because it will, reduce carbon emissions. But, this is fun. I'm really excited to see where this goes.
And the third part of this is Apple, Tesla, and then also Kia. So Kia's public. Kia stock can be bought. Their stock popped today. I don't know what the percentage pop was, but they jumped today when the reports came out that Apple was looking to partner with Kia. So Kia is another stock to also look at in this kind of trifecta or three-way these three stocks we were talking about here: Apple, Tesla, and now Kia. Because Kia will be, if it goes through, if the deal goes through, Kia will be the manufacturer of the Apple Car / iCar, which would be a boom for them. And their CEO, I believe they have a new CEO, and he's really, really pushing that he wants Kia to be this mobile first technology play going into the future versus just being a automotive company. So they really want to get into the tech space, and that's why they really want this Apple deal. So Kia stock is also going to look at as well. When thinking about this new iCar or Apple car.
Yeah, but you got Kia's parent company is Hyundai,
mm-hmm.
And Hyundai has been notorious for suppressing Kia's desire to grow. So I'm interested in seeing how Hyundai responds to the Apple deal with Kia. I mean, they suggested it really. So the deal originally went to Hyundai, and Hyundai said, "Why don't you all do it through our subsidiary Kia?" Because Hyundai wants to be the big brand. And so from a cultural standpoint, Hyundai has always wanted to be the big dog, the big, we're going to compete with the luxury markets. We're going to change the name of Hyundai because anybody who's over 35 really remembers. If you had a Hyundai back, a few years back, people were like, I'm not getting that. Like
that was literally, it was literally like buying a toy car.
Yeah. Nobody was getting
a joke.
It could break down any second. So, but anybody who's been outside in the last like 2 years knows your head is turning often when you see Hyundais. And sometimes we're like, hey, like that's a Hyundai. And we still haven't broke from that thought process that Hyundai is an inferior brand, but it is absolutely cut into the Lexus marketplace, Mercedes, and all these other ones. And the parent company has kept a tight rein on Kia for years. Leon, do you remember the Kia Stinger?
Yeah.
So originally the Kia Stinger had more horsepower than the Genesis. And the Hyundai came back and said Kia had to lower their horsepower because they wouldn't allow any Kia, being a subsidiary of Hyundai, to have more horsepower than their flagship brand. So they have squashed some things on the Kia side strictly because they want to stay in the light. So it's a lot of moving parts to this. It's great because with this, Apple producing their own chips now, the cars being ready. I mean, the phones being ready to integrate into the cars. Like you'll be able to get into a car and everything from your phone programs and kind of makes the car aware of what you like and don't like. It's going to be game changing.
Yeah.
Because I think Apple also approached, what was it? Lucid Technologies with this deal. And Lucid said no, because they wanted to be the leader in luxury brand EV cars. And they thought that a deal with Apple would have them focus too much on purely the tech side. And they wanted to be in, the overall luxury experience of a car. So everything with EVs, electric vehicle markets, if you're not paying a massive amount of attention to it, please let Invest in Education Academy, this live be the first time you say, you know what, I need to pay more attention to what's going on in this market. Because we're talking about state after state after state after state, essentially announcing that they're not going to allow new car sales of fossil burning fuel-based cars in the next 6 years. Where else can you go? It's either hydrogen or it's going to be electric. I mean, I haven't seen any solar powered cars completely solar powered cars that have lasted, beyond like a test. And
you like you said, in the next 6 years, you will have to, if you're buying a new car, you will have to buy an electric vehicle. So Apple sees this. Of course, Tesla right now is kind of dominating. You have a lot of these Chinese EV makers coming into the US and also selling over in Asia. So, this is a market where it's being forced by the government. So it's like, nothing is ever guaranteed, but this is almost as close as a guarantee as it gets, because you have to, because we will have to buy their products. So if you buy a car, you have to buy the product. So EV market is definitely one, you want to look into, do your research. But this, do your research. But this, it was a very interesting topic that came up today with Apple. Apple hasn't confirmed it. But like I said, companies and new news organizations, reputable ones, have said this is going to happen. It's just a matter of when, who the partner will be with. Another bit of news that came out this week also was that I don't know by the day, either the second or first richest man in the world, Jeff Bezos, is stepping down from Amazon. When it happened, people lost their mind. They were like, "Oh my God!" Amazon stock, I think originally dropped like 10 or 12%. In the split second it was announced, and it recovered. But he's replacing himself with the person. So just so everybody knows, real quick, right as of right now, all of Amazon's profits do not come from Amazon the store. 100% of the profits as of right now, after the last couple of quarters, are coming from Amazon Web Services, or AWS. That's their cloud platform. They are by far the leader. They're second is Microsoft, third is Google, and Microsoft is a distant second. So all of Amazon's profits come from Microsoft, AWS,
that, right?
Huh?
It's Microsoft after that.
Yeah, Microsoft is second, Google's third. But Microsoft is a distant second. Amazon has they have a huge lead. But who he's replacing himself with is the man who founded AWS inside of Amazon. His name is Andy Jassy. So Andy Jassy is now becoming the CEO of Amazon. And it's interesting that
Hey, Lee. Let's move that conversation to the into the Clubhouse, because when people listen to this, I want to. It's actually questions still coming in about the iCar.
Oh, sorry. Okay.
Yeah. So I want to answer the questions. So one of the questions is they can't find Kia stock. Kia is a subsidiary company of Hyundai. However, you can buy Kia stock. I don't know if it's trading as what's called an American Depository Receipt, or ADR, but we will look it up and we will post it inside of the Facebook group for you. And if you're looking for a Hyundai, I want to say is actually still private. So you can buy it, but it's a roundabout way you have to get it. So everybody who is asking the question, let's go over to the Facebook group and we will post it at a later date. Not right now, because when we're done here, we're gonna go to Clubhouse, but we will drop some of that information, those questions into the Facebook group, Invest in Education Academy. If you search us on Facebook, you will find the group. And for those of you all, some of the questions is we move towards the autonomous cars. Yes, a lot of people who are in the delivery business will be unemployed. And so you have to think about these things when you're, planning for a career, when you're looking at, where you're placing your money. Is absolutely unfortunate, but this is one of those things where the writing's on the wall and you have to pay attention. You can't think, oh, I'm working for UPS, it will never happen to me. And I saw a couple people had posted about Workhorse. And Workhorse is a great company. However, Workhorse right now, one of the things they're basing their survival on is a contract with the United Parcel Service. If they don't get that contract, it would account for almost 90% of their revenue in the next 3 years. So I like Workhorse, but I just don't like the fact that they're basing their existence kind of right now in on a one deal. And Leon and I often talk about single points of failure. That's absolutely a single point of failure. And with so many EVs entering the marketplace, it's going to be hard to not go with a more established brand, because they're going to have the ability, like even Apple. I don't think that Apple all of a sudden is going to come to the market and kill it. But what I do think is Apple has more money than anybody else to dump into research and development and then production.
Yeah. Yep. I believe Apple's cash hoard is right around 200 billion in the bank, 200 billion with a B, of just cash sitting around. So like Brent said, they have more money they can burn. And they're kind of doing it smart too, because they're not rolling it out as a consumer product, out the door. So it's not like they can introduce it when it comes out and we all say it's terrible and it sucks, because we won't know, because it's going to go to, they're gonna set up partnership deals with all these different delivery companies, and they'll work out the kinks. If it is terrible, we won't know about it, because that'll be between them and the people they partner with. So I think it's kind of smart the way they're doing it, by not just coming out the door with it, but easing out the door, kind of doing like a backdoor way, doing with small businesses in local communities, or as they call that, last mile, like delivery companies.
Yep. And so we see you all saying give you the picks, and we will absolutely give you our 2 stock picks as we go into this. But there are so many things that have either been announced, changes. I mean, we have GameStop, AMC may do Chapter 11 bankruptcy. What does that mean for stockholders? You have, like Leon said, Jeff Bezos stepping down as CEO of Amazon. You have the new regulation around medicinal marijuana that may make a huge impact if it's approved and goes through. Again, we're going to take this over to Clubhouse, but it's so much happening right now. I look forward to the conversation over there, because it's more free flowing. But for here, we want to kind of keep this a little more concise for today and deliver this information, and then jump over to the platform. And again, if you would like, please go to IEAmembers.com. We've had several people become new members. Actually, the trend is going beyond Christmas. People are still buying IEA membership as gifts. So we
Yep.
absolutely thank you all for buying the gift of financial literacy for your family members. And we don't take that responsibility lightly that you chose us. I mean, there's a lot of people out there talking about financial literacy, and the fact that you all are choosing to show up with us every Wednesday at 9 o'clock and then jumping into Clubhouse with us. We're having some great conversations over there. And yeah, this is just going to continue to grow. So, Leon, do you have your pick, or do you want me to go first?
Yeah, I have mine. I go first. So my pick is kind of dealing with staying with the theme of cars. My pick is Li Auto, ticker symbol LI. They're a Chinese electric vehicle maker. And so, I mean, they recently became public in the last, I don't know, couple months. So this is rare for me. It's an IPO that I'm buying, that I'm picking here. But the reason is kind of what we just said before, right? Is that the world is moving, like the world is mandating that we move to electric vehicles. Governments are saying you have to buy, if you're going to buy a car in the next 5 to 10 years, if you buy a new car, next 5 to 10 years, it will have to be an electric vehicle. So this is an area that, like I said, nothing is guaranteed, but this is almost as close as it comes as far as a product being mandated by governments around the world.
Oh, Leon, so, real quick, let me jump in 2 seconds. If you're looking for Leon on Clubhouse, you can find him under Leon Noble, Leon Noble, Noble. If you're looking for me on Clubhouse, you can find me Brent, Brent Simpson, Simpson. So just look for Leon Noble, look for Brent Simpson. We were early adapters, so we were actually able to use our own names. So
yeah, right.
Find us over there if you're looking for us. All right, Leon, go ahead.
Yeah, so just say, yeah. So the reason I picked Li Auto, again, EV maker, electric car maker, as I was saying, governments around the world are mandating that new cars have to be electric when they're sold in the next 5 to 10 years. So it's like I said, I guess I just said before, nothing's guaranteed, but this is almost as close as you get. We don't know who's going to win, right? I mean, there's this is Lee. I'm the one I'm picking. There's Neo, there's XPeng, there's Tesla. No idea who's going to win. So this is just, and I'm buying actually a few of these. I'm kind of dipping my toe in a lot of them. So just a few financials on them. In the third quarter of 2020, their revenues were $363 million. That was 28.4% over the third quarter of 2020. The year prior. There was 28.4% year-over-year growth in revenue. And they announced, so that in January, it was actually this week or last week, they announced their January deliveries of vehicles, and the deliveries were up 400%. So they delivered about 1,500 vehicles in January of 2020, and then this year of January 2021, they delivered 5,400 vehicles. So in a year, they their vehicle number of vehicles they delivered grew by 400%. So again, recap: revenues were up 28% in the most recent quarter, third quarter, versus a year ago, and the number of vehicles they delivered was up 400% versus a year ago. So again, Li Auto, ticker symbol is LI.
All right, and I am up. So I'm choosing Aurora Cannabis. And if any of you all have not heard, the federal government is entertaining federally legalizing marijuana. And if that happens, we can see a lot of growth in this marketplace. Now, Aurora Cannabis, actually, believe it or not, it was one of my picks back, and this is before we started doing IEA. I had picked Aurora Cannabis March 24th, 2020. It was trading at $3.71 a share. It is now trading at $13.75 a share. So yeah, it's been a very good experience with this company. But what I do like about them, Aurora Cannabis has roughly like 5 subsidiary companies. Now, I wrote some notes. They operate in 25 different countries. They do cannabis breeding, genetic research. And by the way, the genetic research is huge in this space right now because everybody's looking for the best strains. And if you know anything about what happened with like wheat, and Leon, do you know the story about wheat in the US?
No.
It's only like one major brand of wheat that we consume throughout the US. And what happened, it was a period in history where other farmers would drive around and spread their seeds, which were a dominant genetic form of wheat seed, into other farmers' wheat beds, and it would take over. And then they would come back and charge them royalties for using their designed or their genetically engineered wheat. But they couldn't stop growing it because it took over the weaker form of wheat that was growing. So like it's a understanding genetics, and I guess that's that horticulture behind it is very big business, because if you can get the right breed of cannabis to grow stronger, less disease, cleaner. I mean, yeah, I love that part of it. So they also do wholesale, dry cannabis, oils, capsules, and consumables. And consumables have a higher markup than actual wholesale side of medicinal weed distribution. So, had them having their hand in a lot of different areas in the medicinal marijuana, not even medicinal marijuana, just marijuana consumption space. I've liked them since they were at $3.71, a little under 9 months ago, 8 months ago. Let me see if I can actually pull it up on the chart if anybody's watching. Let's see. Right, you see it right around here. This one has it as low as 413. I'm pretty sure it was 371 was a number because I actually wrote it down for the day it hit it. That's my pick for today. Oh, sorry. And the ticker symbol is ACB, Aurora Cannabis Inc. Ticker symbol ACB. Currently trading at $13.75 a share. It's up 1%, $1 a day, which is equal to 8%. Again, at the very least, you think about this. Leon and I, before I go down this road, we do not support day trading. We are long-term investors. We think you should hold minimum 3 years. We understand some people don't have that length of time to invest, and some people have more time. If you can make it out to 10, that's even better. So we try to pick strong companies that have the potential to grow, and you should always do your own research. But if you owned Aurora Cannabis today alone, it's up 8%. That is over 800% more, way beyond 800% more than what you would get at the bank.
Yep.
In one day, you're talking about getting over 800% of what you would get at the bank. So, and the reason I'm bringing this up, I don't want to draw attention to like day trading or, I'm gonna get in for a day. But if you are holding your money in a savings account because you think it is safe, you are losing. We have a stock, and we're going to bring this up in Clubhouse. I'm not even going to bring it up here. It was one of our picks last year that the company just got bought out. The stock is up 45% today alone.
Mm-hmm.
Today alone. And these are things that if you just were in it, imagine going to sleep with 100,000 invested and waking up with 145,000. That's a good day. That's some people's salary for the year.
And that's not going to happen in a bank savings account.
It's impossible. And so what happens when you're in the market? It's possible. And so it's not to say every stock is going to do that. And the reason, I'm probably sounding a little preachy right now, is there's still a lot of people who think the market's unstable. We don't know what the government's going to do. And I'm just going to keep my money in the savings account because it's safe. Your money is not safe and you are losing. If nobody is going to take a hard stand and tell you that so you can, have a change of heart and do something different, I'm going to tell you, you are losing. Every day your money is losing when compared to inflation. And I mean, if you begin to talk about opportunity costs, that's a whole nother game changer. Because if you were in this one stock today, you would get 800% more than what you would get in your bank.
In one day.
In one day.
So imagine if you sat in a stock for 3, 5, 10 years, the return relative to a bank.
Please, 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 everybody, if you're not an Investing Education Academy member, that's okay. If you are in our Facebook group and we're hanging out, we're talking, that's cool. We're happy to have you. But when we're talking about what's happening in the marketplace, and let me go back to Leon's pick. What is Lee at? Because
30 bucks, I think.
So if Lee is up almost 2% today, you're talking about, well, let's call it, it's 1.7%, 175% better than what you would do at a bank in one day.
Now imagine if you're in both of those.
Right.
You know what I'm saying? Like add them together, you got what, almost 900% more on your money than you would have made in a bank.
Leon and I have been doing this for roughly going on 9 months, maybe 8 months, 9 months, maybe 10 right at this point.
No. We're at July. Well, if you go April, it depends on what, but if you say April, pushing like 6, 7, 8 months.
So in that time frame, from the stock picks on these lives alone, I think we've averaged like 40%, maybe.
Yes, I'm looking at it's about 40%. Yeah. So so if you just followed our picks alone and we're not saying to follow them, it's just informational purposes only. If you choose to pick these, that's great. But if you had, your average return on our stocks is about 40%. So just by our picks alone, and we have somebody inside Investing Education Academy. Her strategy is just to follow our picks. Now again, we didn't tell her to do that. She can do that if she wants, but in about 4 months, if just following her picks, she's made over 63%. 63% on her money. And we're not saying that we're the greatest stock pickers of ever, that we're geniuses. All we're saying is we're in the game, right? We're actually in the market, and don't get it twisted. We have losers. Like it's not 100% for a reason. We're at 40 some odd percent. That means 60 some odd percent. Our average is 40 some odd percent. If we were at 100%, everything would win. We have losers without a doubt, but 46% on average is the gain for the stocks that we picked versus 0.05% on interest rate in a savings account. There's no comparison.
Yeah, and these things seem fun or like, oh, that's cool, I'll get in eventually. If you missed a year already because you've just been watching us trying to decide if you're going to join Investing Education Academy or not, you probably have missed like opportunities to make anywhere from 20 to 70% on your money because you're watching, trying to wait. We've had people jump in and we've made millionaires, and it's like, there's not a lot of people that can say that, and just people, look, it's going to be 14 months from now, it's going to be 2 years from now, 3 years from now, IAA will still be here. And, we do these lives because we really just want you all to get the information. Honestly, Leon and I are invested. Our portfolio is doing very well. We're doing this because we really understand that sometimes you don't feel like it's a place to go where you trust the people who are delivering the information. Or maybe you think they're lying and they're not really, living that life. We've been investing in the stock market since we were 16 years old. We are 44 now. We're not hiding it. We're also saying we're not the smartest person that's going to get every pick right. But I'll tell you this, we had a stock lose almost 100% return over the last like 4 or 5 months. The stock is Zoom. And even with it losing about 100% of its value of the value in it from its year's gain, that's important to note. 100% loss of the year's gain is still what, like 200 or 100?
Well, I'm looking at it right now. Yeah. So right now, we picked Zoom back. Zoom was one of our first picks on April 1st. The stock, at one point we were up over 400% in Zoom. We've lost 300% in Zoom since it peaked. And
say it again. We've lost
we've lost 300% in the Zoom pick from its peak. Not since we bought, just from its peak. As of today.
Real quick, Leon. For everybody watching and everybody who's listening to the podcast people, I want you to guess what you think the return is since we picked it, considering Leon just told you that 300 and some odd percent of it is just vanished.
Gone. Yes.
And for everybody who's watching this live, please, if you can indulge me just for a moment, we normally don't ask you all to do much, but if you all can put what you think the rate of return on Zoom has been since we picked it, considering it is down 370 some percent since that time period.
Since the high, since we picked it, yeah.
Since the high of us picking it is down over 370% since the high. I see 158% come in. Who else has a thought on how much they think the total return has been in Zoom, considering we've lost 370% since its high last year? 126%. Okay. Beverly Vince, thank you for participating. I really appreciate it. Monty says 30%. That's a good guess. That's smart. So we have 58%, 126%. Mo came in 60%. So we got 158%, 126%, 30%, 60%. One more. Let's get one more. What do you think since picking Zoom, the total return has been to this point today, even considering that it's down 370% from its high since we picked it? One more. Brian, we got two more in. 50%, 30%. Okay, this has been fun. Leon, where are we at? Like drum roll.
Yeah. So even after losing about 350, 370% on Zoom, we are still up 177%, 177.72% on Zoom. Even after losing 350, 370% on a position in Zoom, we're still up over 170%. So that shows, and again, not saying every trade is going to turn out like that. We're not saying we're geniuses. We're just saying we're in the game. And we were up close to 500% at one point. Now we're up 177%. So that just shows you, again, Zoom is a volatile stock. It had its heyday during COVID, during the summertime. But even still, I mean, Zoom is Zoom. We're all going to be using Zoom into perpetuity pretty much. And we're still up 177%.
Oh, hold up. Beverly told us we need to give her credit. So Attorney Beverly Winstead of the law office of Beverly Winstead was the closest at 158%. And
okay, man.
She's been a loyal listener since we started this. And I'm betting that she bought the stock, and that's why she knows.
Right. She bought it right around when we in April. She bought it when we picked it, so she knows.
But the reason why we talk about this stuff, and we're telling you about our shortcomings, right? We're laughing about it because we're still up 177%. So some people might be like, "Oh man, that stock lost." Who cares? Like honestly, like when you really boil it down, we're still up 170+%.
And just in general, so right now our worst performing stock since we picked these is down 26%. Our best performing stock since we started is up 300. Well, it was Zoom. Zoom at one time was up close to 500%. But our best performing stock since we picked is up 347%. So our worst performing is down 26%. Our best performing is up 347%.
So if you take those and you average them out, you're over a 300% rate of return. Now, that's not how you do it. That's not the proper math. But I'm doing this for shock value. Again, and I'm gonna leave it here. I'm leaving here. If you all think that having a 401k at work and never reallocating it, like you get it and forget it. Most of the people listening to this, you can probably think back and realize you have no idea what the allocation is in your TSP, your 401k, 457 plan, 403b, whatever it may be. You probably haven't touched the allocation in years, if you've touched it ever. And the belief is, well, I keep putting money into my savings, so I'm gonna be all right. You might be all right, but you're losing compared to what you could be doing. The opportunity cost of your money. If I have money sitting in a savings account, I feel nauseous.
Oh yeah.
It bothers me to the point where I can't sleep. And so if you're okay in a savings account, it's probably because you've never really been in the stock market. And even if it's real estate, if it's entrepreneurship, all these arms give us a freedom of decision that still can come. You can still save. I'm not knocking savings accounts. People have their thoughts and you have your belief, but please, everybody, it's not how you win. It's how you work hard. You work real hard. I mean, I put money in an investment account at one point in time, actually yesterday, I put money into an investment account. I went to sleep yesterday. It was about $1,000, no, $1,000. It was just $1,070. $1,070. I woke up today. It was $3,300.
Good return.
Well, I mean, it was money that somebody had sent me that I wasn't going to use, so I just bought a stock. Well, I bought Ethereum. So I'll tell you what it is. It won't be ambiguous. And I woke up today. It's $3,300. It was $1,700 when I went to sleep. And so when you're looking at, putting your money in places, it matters. And some of you all think, oh, it's a savings account, it's cool. What changed in your savings account from last month? What was your interest rate? How much interest did you get on your savings account last year? And I don't mean how much new money did you put in. How much was your interest?
What did you earn on that money?
My daughter's account returned $3,000 last year in interest, and she's 8 years old.
In the market, not in
the market. It's not in a savings account. She does not have a savings account. As far as my daughter would never have a savings account.
And like you said earlier, nothing wrong with savings accounts when it's for emergency funds, everyday bill money, perfectly fine. But investment dollars should not be in a savings account. You're losing money because, again, inflation is 2 to 3%. Your savings account is paying you, if you're lucky, 1.5%. That's still below inflation. So you're losing buying power on that money every day if it's investment money that is sitting in that account. So like Brent said, savings accounts are cool, but they really should only be for like spending money or like an emergency fund.
I don't even use it for that anymore. I'm like, honestly, so I agree with Leon, but I'm in my zone right now, and I'm like, I'm just telling the truth. If I can just stick it in a cryptocurrency and take my chances after I've done my research, and I'm like, if I need the money, I'll liquidate it there and then buy what I need. I'm gonna do that. Like, I don't want any money in the savings account anymore.
But again, there's nothing wrong with putting emergency money.
We're switching roles here, Leon. We're switching roles.
I'm just because everyone doesn't have your suitability. It doesn't have your risk taking. So.
No, it's funny because normally I'm like
you're that dude, right? Yeah,
I'm the guy like no, we can't say that. But and I am being very specific and saying for me and my family, it's pretty cool seeing the members in my family who've invested recently over the last 2 years. They've made more in the market than 20 years of working and giving money to their good government paying jobs. They've made more. One person I know close to me is over $92,000 last year. In just the money that they already had put away for a rainy day that they thought was safe. They made $92,000 last year just by like saying, you know what, let me take a chance.
And putting it in the market.
Putting it in the market. $92,000. They thought like they hit the lottery or I did something illegal. I'm like, no, this is what the market can do.
Right.
So it's not everybody's story, and the market has risk, and everybody should think about that risk when you're investing. But if it's a company with good fundamentals, it has a marketplace where it can reach between 1 million, 1 billion people with their service or product, and they look like they have good management. In most cases, it's going to beyond outperform a bank. Mm-hmm. When you start day trading, you can lose your shirt real quick. And we do not support day trading, but we do know there are people who have mastered it, and we're not knocking you. We're just saying for the normal everyday retail investor, a buy and hold strategy by far is a better strategy. And so, that's it. And I know this went somewhere totally different, but I feel like somebody needs to hear that today because it's a lot happening right now in the market. We're going to talk about it right now, but we couldn't even justifiably go into all of it because there's so much change afoot, and many people don't know how to navigate that, so they're just staying out of it, and that's the wrong approach. This is the absolute wrong approach. And I don't want 5 years from now to come, and then maybe Leon and I are doing our Facebook Lives from some mansion somewhere, and everybody's like, "Oh, look at them." No, you should have saw us when we were grinding in our rooms, and we were like, just doing these because we wanted to help people, but we were still investing.
Every day.
Every day. And then the fruits of those labors are going to come 5 years later. And 5 years is not that long, but also it's very long when you're in the market and you're making $100,000 a year investing, or $10,000 or $2,000 or $100 more than what you would make at the bank. It's just a better situation. And so we want everybody to know it's available to you. You gotta say yes. So,
yep.
All right. Thank you for everybody bearing with me.
Yeah, we went way left in that rant, but it's always good. Sometimes it needs to be heard. It needs to be said.
Yeah, I think we need to do one of those savings account versus like everything else again, because
really,
we gotta drive that point home. And then honestly, like crypto, and this is a whole new world out there. So if anybody's looking to join Investing Education Academy, please come over to IEAmembers.com. You can register today. Everything's there that you need to become a member. We have amazing content inside the platform, and Leon goes bananas with content in there. If you can keep up, congratulations. But if you can benefit from it, then you're winning. And so
right.
We're heading over to Clubhouse now. If you want to listen to the podcast, you can go to IEApodcast.com, and we look forward to seeing you over at Clubhouse. I already saw that some people are sharing invites with one another in the chat. That's awesome. To see that communal feel, that's beautiful. And we really want to say, yes, you cannot go to the platform if you are an Android user right now. I saw the comment come up, can I get in there from an Android user? And that's actually for my sister, so I feel bad that I can't get her in. So you gotta get an iPhone or something.
Gotta get an iPhone or iPad.
This was gonna happen with the car. It's gonna be like,
right.
It's like, yo, in order to drive, you need an iPhone. It's like, okay. And one thing I gotta say, so they're playing with this idea that if you have an iPhone and in certain malls and stores and buildings, they're gonna have sides with like no windows. And when you have an iPhone, you're gonna drive up in imagine like a flat building. It's gonna come down with a fork and a magnet and just hit your car on the top and then pick it up and elevate it to a position so your car is parallel on the building, and that's gonna be parking. I was like, wow, that's pretty inventive.
That's some futuristic thing, but I guess we're there now.
Yeah. So anyway, we're gonna head over to Clubhouse now. Look for the group. What do we call in the room, Leon? Let's just say that the iCar is really here or something.
It'll have iCar in it. So either search for Brent or myself, or search iCar, and you should be able to find us.
Yeah, there you go. We see you all over there. Thank you, everybody. And next Wednesday, we will be live again at 9 p.m.